Good afternoon, everyone. This is Anthony Alaka with Torrey Hills Capital, and welcome to the Vizsla Silver webcast for February 14th, 2023. Hope everyone's doing well, and thanks for taking the time to join our virtual lunch. We're very excited to bring you Vizsla Silver. They are a well-funded Canadian-based mineral exploration company focused on its flagship Panuco gold-silver project in Mexico. The Panuco project is emerging really as a tier 1 asset and has grown to become a very large, high-grade project in an excellent mining jurisdiction. The project has shown some of the highest grade silver intercepts in Mexico in recent years. In fact, in only about the last 10 or 12 months, the company has almost doubled its indicated ounces in its most recent mineral update. Vizsla trades on the New York in the TSX venture under the ticker VZLA, trading with a market cap of only $250 million. And with the most recent resource update, solid cash position, continued potential to grow reserve, great management team. I mean, it really checks all the boxes. We feel that there's plenty of upside in the stock. With us today to discuss Vizsla Silver's operations and growth strategy going forward is the company's Senior VP of Business Development and Strategy, Michael Pettingell. Michael, it's great to have you on today, and thanks for taking the time to bring our viewers up to speed on Vizsla Silver. A lot of exciting things are happening with the company, including the news from yesterday, and I'm happy to have you share those with our group. But before we get started, I just want to mention, if our viewers have questions during the presentation, simply type your question into the Q&A or chat box, and we will make sure that it gets answered. So with that said, I'm going to turn it over to Michael Pettingell. Michael, the floor is yours.
Excellent. Thank you so much, Anthony. And I really appreciate the kind words. And we're very excited not only to be here today to present the project and the company, but what we're doing, like you mentioned, is something extremely special and it's quite rare. We're actually one of the most aggressive explorers in the entire silver space. We're doing 90,000 meters of diamond drilling this year, and that'll all feed into another resource update in the second half of this year. So again, this is an emerging discovery. This is a fresh district that has never had any commercial production, although mineralization and the discoveries date back almost 500 years to the conquistadors. So I'll get into the presentation a bit here. And again, you did mention we're trading on both the NYSE American and the TSX venture under the ticker VZLA. Obviously, we'll be making some forward-looking statements. Feel free to read this at your own time. So why silver, right? We see silver as being an absolutely crucial metal for the electrification of this planet. If you consider copper to kind of be the highway that's going to connect the planet, well, it's going to be silver as the off-ramp or that actual connector. And the reason is it's antimicrobial, it doesn't corrode. There's all these phenomenal features of the element itself. But as you can see, the price has been slightly suppressed for some time, which doesn't correlate to the demand that we're seeing overall. When you've got the renewable energy, particularly in the photovoltaic cells, being a massive driver of that industrial component for silver, but essentially these electronic vehicles, they're computers on wheels. You need about 10 ounces of silver per electronic vehicle. Now, those are just two of the industrial uses. We also are all well versed that silver can be a monetary metal, a hedge against inflation, typically, and in a currency here. So we still see the demand for all of those facets of silver, but that supply is just not online. So where silver typically comes from is big deposits, copper deposits, typically located in South America. So these very large open pit projects, which frankly are becoming more challenging to discover. The mineralization is becoming deeper and more expensive to extract. And frankly, ESG and environmental considerations are now, putting a halt on a lot of these, multi-billion-dollar open pit projects. So with all of those in mind, the need for silver primary assets is more important now than ever. And in fact, when you look at the major silver producers in the world, that the Heclas, the Pan Americans, the Fortunas, the First Majestics, these groups that have silver in their name, they're actually producing more gold, and they have been for the past few years now, producing more gold than they are silver. So this demand is certainly increasing, and the supply is not there to meet that demand. Obviously, something's going to have to change. And where we sit with Panuco as being a true silver primary asset, you can see why this is something that's so special, and why not only for Vizsla as we hold it today, but for the majors moving forward. So the investment thesis for Vizsla Silver, we've mentioned a couple of these, but these 5 points are really quite important. So we are an emerging discovery. This is a newly consolidated district. This was not a district that was plucked out of the non-core portfolio of one of these majors. This has never, again, had any commercial production or systematic exploration. This is a district that suffered fragmented land ownership. And it wasn't until our CEO, Mike Connor, went down to the district in late 2017, early 2018, and started piecing together through private family acquisitions. It ended up being 2 large portions of this property that an earn-in agreement was exercised, that we now own 100% of this 6,800 hectare land package. And I'll get into that in just a moment. We've got a fantastic management and board. You hear this a lot in mining pitches, but we've got a combined experience of 185 years. And really, it covers every aspect of the mining industry, from operations to exploration, the capital markets, and of course, engineering and development, which is going to be really important for this next phase of the Panuco life cycle. We do have multiple avenues to re-rate. We are a very aggressive explorer, as mentioned. That usually translates into discovery potential, which we have an ongoing target list of high priority exploration targets that can always translate into a resource. And we've been successfully doing that in step, and have put out 2 successful resources to date. The first one came in March of last year. It was 106 million ounces silver equivalent combined. We've now doubled that in just 10 months' time, as Anthony alluded. And we're going to look to put out another resource in the back end of this year following this 90,000 meter program. We also have this optionality to expedite into a production scenario via this existing infrastructure. So as mentioned, this discovery, or the initial discovery in this district, does date back to the conquistadors almost 500 years ago, but it's never had real mechanized production. So there's small, scrappy little mills here and there that provide support for proof of concept, but also give us excellent infrastructure, at least the base infrastructure to use to go into that production scenario. And we're well positioned to execute here. As mentioned, we do have 100% ownership of this district. We have 62 million Canadian in cash right now following a recent financing, and we have 0 debt. So we're in a very good way to complete our objectives for the next, call it 12 to 18 months. Quick on the company snapshot. You have to take a little bit of this with a grain of salt, as some of these numbers have changed. This was put out on February 2nd. We just did complete a $45 million raise. We would have closed that last week. It was priced at $1.65, and it was a straight unit deal, or excuse me, straight share deal, common share. There was no unit attached to it. So you can essentially assume that there's roughly 207 million shares outstanding following that raise. 13 million warrants. These warrants have a strike price of $2. And they expire, it would be late November of 2024. Options, we've just granted some additional options to the management team, the advisors, and the board. The option program that we have employed here at Vizsla is the 10% rule, so 10% of the outstanding shares. And you can see our market cap is just under 300. It's actually closer probably today following the close of that financing. It's sitting closer to 340 million Canadian. Our average volumes have been picking up steadily, and you can see we've got a healthy list of analyst coverage here with a consensus in Canadian terms, representing 100% return to current market levels. And you can see our shareholder base is heavily weighted towards the institutional side. That's been a very large push for us here at Vizsla. We're focused on getting that smart money into the name, that money that doesn't jump quickly, that sees long-term value. And we've got some very notable heavy players. Steve Land at Franklin Templeton, Fabio over at Force Sale, Eric Sprott, the rest of the Sprott asset management team as well. We've also got Fidelity now in the file. So we've been increasingly adding to the quality institutional shareholder list. Last thing to really note on this slide is management directors, insiders. We hold about 16% of the outstanding shares of the company. Our largest shareholder is our chairman, Craig Perry. Many of you will know him. He's an industry veteran. We'll go over his bio in a moment quickly. But suffice to say, management certainly has skin in the game, and we are absolutely allergic to dilution.
And Mike, just a quick question on that front. Can you talk about who participated in the latest raise?
Yeah, that's a great question. So the latest raise was actually fantastic. It was brought on by Eric Sprott himself. And in fact, he said he would only come in for the deal if it was a club deal. So there was 5 groups that went into this last deal for the 45 million, and that's it. So only five institutions played in this last round, and it was basically all of those names I mentioned. You have RBC Asset Management, Eric Sprott, Force Sale, Franklin Templeton, and a Canaccord Wealth Manager as well.
Great, thank you.
Yeah. So on the management team, I won't go over every name, but it's important to highlight here again that we're well experienced in virtually all avenues of the industry, but it's important to highlight that there's big company experience with a particular focus in Mexico. You can see almost every individual has had experience with big major companies, particularly silver companies. Marty Dupuy, our COO, 10 years in Latin America with Pan American, Orico. Hernando, our country manager, he's another capstone in ex-Ignico. Lots of Ignico experience. These are big companies, right? One of the most notable names to highlight here is Jesus Velador. He joined us last April, and he's a PhD in epithermal systems. He's also a Mexican national. He lives in Durango, which is just across the state border from where we are in Sinaloa. He's worked at virtually every project in and around our district. He's actually done a little bit of work in the past on our district. His most notable success is supporting Peter McGaw on the discovery of the Valdecañas vein at Juanicipio. And you'll hear me talk a lot about Juanicipio through this presentation, because this is a $1.5 billion US valuation company that has a single asset in Mexico, silver primary, that has just become a producer. This is where we feel Panuco is headed. We just have to de-risk the asset. But Jesus comes to us with this academic sense, being a PhD in the type of system that we have at Panuco. He really provides that additional layer of targeting, identifying lineaments to be able to add and delineate more resources in our project. On the board side, again, Craig Perry, many of you will know him, current chairman of Skeena Resources, founder of ISO Energy, Next Gen Energy, senior advisor at EMR Capital, and he spent 10 years at Rio Tinto as a development geologist. He started a cobalt company with our president and CEO founder, Michael Connert. It would have been just before they got into the Panuco project here. That's actually what allowed them to have the capital to fund not only the acquisition, the initial option agreement acquisition for Panuco, but also they founded Inventa Capital. Inventa Capital is the private parent umbrella to Vizsla Silver. And Inventa has about 20 companies in its umbrella. Half of them are public, half of them are private, looking to go public. And really, all of these companies are here to satisfy those critical metals that the world needs on this electrification, right? So they've got tin, they've got uranium, there's obviously cobalt, there's silver, there's gold, there's really every single commodity that you would need for this electrification. The last name to really highlight here is Simon Smirlik. Now, Simon is the current Chief Operating Officer of Ausenco Engineering. Ausenco is a global engineering firm that specializes in developing, constructing, and commissioning mining projects in Latin America. So we're really blessed to have Simon on our team. He only sits on two boards, Vizsla Silver and Vizsla Copper, which is a spin out of Vizsla Silver. Simon he's actually built more mines than most people have been to. And in fact, the recent build that Ausenco completed was a direct comparable of ours, which is Silvercrest. That's located just up in Sonora, couple hours drive from our project, and they completed that build on a fixed cost basis with a similar throughput that we envisage at Panuco. So an excellent feather in our cap as we look to develop and benchmark costs and everything moving forward. So ESG, it's extremely important to us, as it should be every mining company. There's a lot of buzzwords on this slide here, so I'm not going to belabor all of them, but really it all culminates into this one down here, that we're focused on supporting the initiatives that provide long-term benefits to our surrounding communities. We can't operate a mine, whether it's in an exploration stage, a development stage, or a producing stage, from Canada that's located in Mexico. You just can't be done. You need to have the community support. You need to have the safety culture. There's many things that go into it. So we hire virtually any able-bodied individual that wants to work in the local communities. We've got about 200 individuals down on site. 70% are made up of the local communities. And to touch on that safety, I think I've got some metrics on the next slide, but we've just ticked over 1 million man hours without a lost time incident. That is absolutely industry leading. I'm challenged to find another major mining company that has that type of safety record, particularly at this stage of the project. So we're very proud of that. We have ejidos that cover our district. Now in Mexico, the ejidos are like your local community groups. So either First Nations in Canada or Native Americans in the US. And these groups really have a say in how your project moves forward. Now, in Mexico, the federal government can grant you your permits, but it's actually those local communities, or ejidos as they're called, that allow you to push a project forward. They give you access and allow you to actually do the work. So we have 5 ejidos that cover our district package, and 4 of them we've signed 30-year production or operating agreements. So that's a testament that not only do we have the community on side, but they're buying into what we're doing and are confident that we'll be able to deliver, responsibly.
And what do you have to give them in return, Michael? Is it like jobs or contributing to the local communities? What is the...
Yeah, that's a great question as well. So it's certainly being on sides with them. And one thing that we do is hire locally, right? So that's a big benefit to getting those agreements signed, but it's pay. They do get paid for these agreements. It's not a material amount to us, in the orders of 6 figures, $100,000, $200,000 per annum. But for them, this is huge, right? The average wage in Mexico is $5 a day. So when you talk about money like that going to one of these subsistence farming communities, that goes an incredibly long way.
Absolutely.
And so here you can see a couple of those stats that I mentioned. Again, I don't need to read all of these, but we're very proud. Look for us to put out our first sustainability report in the second half of this year. So the project, again, quite large. It's actually, I'm going to skip ahead one slide because I love to show it. It's the size of the island of Manhattan. This is 14 kilometers long. It's 7 kilometers wide. And our resource, the bulk of our resource, where it sits, right on the edge of the financial district. And that's it. We have the rest of all Midtown up to Central Park and beyond to continue exploring for mineralization. And in fact, we know that we have it there based on this known vein strike that we've mapped, we've sampled. We just haven't been able to drill it on any granular level to put resources around it yet. So you can see here, our resource represents only 10% of these known veins, these red veins that we have in the district. So where this district is located, it's located in western Mexico, about an hour drive from the coastal city of Mazatlan. So you'd fly into Mazatlan Airport. You can take a left on the highway to go to the coast, and we can be sitting on the beach and enjoying tacos, or we can take a right and drive 30 minutes on highways to get to our project. You can actually see there's two highways that bisect the property. One is the old road, this really squiggly road. It's in fact where we made our initial discovery off of, and that would have been in the fall of 2020. We made the initial discovery at Napoleon. And this more smooth line, this is the newer toll road. Excellent infrastructure. It's got bridges, it's got tunnels. Takes about 3 hours to get all the way to Durango from the coast of Mazatlan. So these highways, not only do they add that access for us, but they provide security. In Mexico, there are cartels, and one thing that we benefit from is we're not off in a remote area that's fly in, fly out. You don't have to drive down dirt roads for several hours. We are right along highways that do have an increased security presence, and there's high tension power that runs parallel. So we're in a very, very good way from that infrastructure. And as I did mention, this is past producing. It's about 3 to 4 mills that are in and around this district. They're all very small. They're not the right size for what we envisage on this property. But again, they do provide that proof or support for proof of concept. They're all conventional mills. They don't require any specific technology that's going to be able to remove arsenic or mercury or any of those nasties. We don't have any of that. It's all straightforward. If you continue going up into Durango, 80 kilometers is where you run into First Majestic's flagship San Dimas mine. San Dimas would be the most direct analog from a geologic perspective that we have to Panuco. The difference is, and you've heard me say this a bunch, the difference is we've never had commercial production. First Majestic San Dimas has been producing commercially for 100 years. It's produced 1 billion ounces of silver equivalent over that time. It continues to produce about 11 million ounces per year. This is actually the asset that built the company Gold Corp. It's actually also the asset that built the company Silver Wheaton. They got a stream off of this asset that was a company builder. So if there's any parallels being drawn, we see Panuco as an absolute transformative asset, whether it's Vizsla that owns it or whether it's another company that ends up acquiring Vizsla.
Yeah, so I'm just sorry to cut you off, but First Majestic now owns that San Dimas, right? Correct?
That's correct.
And that's become basically, and that's become a cornerstone asset for them. Have you seen similarities between, some of the drill results that they reported versus what you are seeing at Panuco?
Yeah, it's tough to compare apples to apples in that sense, largely because they're so far advanced, right? The drilling that they're doing now is very fine-tuned. They know where those high-grade centers are. But what we do see, and I'm just going to skip ahead quickly while we're on this topic, right? I'm just going to jump to a comparison slide. One more here. There you go. So here's San Dimas. And you can see the size of the reserve this is actually total resource that's remaining. We've actually got more mineralization. It's just at a slightly lower grade. But you can see this is an absolute vein field. And it's slightly different than what we're seeing at Silvercrest, which is a tight pocket. This is what our district is now looking like. So they've got a similar footprint as far as their property size, and they have this chopped up kind of vein swarm. Ours has got a slight different orientation, but exact same timing, Cretaceous Eocene, volcanic intrusions. It's polymetallic vein hosted. So that just means that we've got silver, gold, lead, and zinc. This is the exact same carbon copy from a geologic point of view. Again, what they've had the benefit of is years and years and multiple rounds of drilling to really know exactly where those high-grade centers or shoots are. And when they do drilling results now, well, they're just focused on those high-grade centers. So they're gonna be much higher grade than what we're seeing. We're still in that earlier exploration phase, but you can already see visually we're starting to evolve into this vein field. And if, I go back a couple of slides, you can see when we first came into the district, there was a lot of broad, swathy lines that were more inferred and interpreted. This district, it's never had a geologic map, and that is exploration 101. And again, that's due to fragmented land ownership. Just because one person owned, this claim down here, it doesn't mean that mineralization doesn't continue up into these claims here. It's just you couldn't map that, and you could only infer that. So once we've had the district, we've now been able to map 46% of this large district. We've got 6 geologists in the field full-time mapping. And that's allowed us to really fine tune, particularly in the east here, our understanding of where targets lie. I mean, you can see there's been this little claim block here. You can see in the orientation has changed of where we think the mineralization is trending. So as we continue to map and sample and test, well, we've increased our vein strike, but we've also taken some away. Right. And so it's this fine dance where we're marching forward, we're inching forward, we're stepping back, but we're certainly progressing with our understanding of this district. We've got young families. I've got a 3-year-old and a 1-year-old, and we often say they're going to be finding veins in this district when our kids are having kids. And that's the exact same thing that they've been doing at San Dimas for 100 years. Right.
Yeah.
So back to this, the bulk of our resource does sit in this southwest corner. And really, that's just a product of where we've been drilling. We have identified lots of mineralization, as I showed you in the eastern as well as the central portion here. But this is just where the bulk of our drilling is focused. And it's going to continue to be like that in the near term. So that 90,000 meter program we're doing this year, that's 7 drill rigs. 4 are going to be focused on resource expansion and conversion, particularly around this Copala structure, which is the bulk of our resource, and I'll get into that in a second. And then 3 are going to be focused on exploration, so testing, high priority targets that are proximal or outboard of this resource center of mass, is what we're calling it. So I've discussed this very large, vastly underexplored district, and so we'll get into the resource. Now, this is a difficult slide to look at, so I'll be quick. Basically, the maiden resource we put out was 125,000 meters of drilling that came 18 months from discovery. We put another 82,000 meters of drilling into this resource, and it effectively doubled the amount of contained metal. We sit now with 219 million ounces combined, grading just under 500 grams per ton combined. 48% of this resource is in the indicated category. So that's that higher confidence category, which you need more drill holes that are tighter spaced to be into that confidence category. As I mentioned, we are polymetallic, so there is a component of lead and zinc similar to San Dimas. However, we've got 93% being silver and gold. Of that 93, or about 60% silver. That's why we highlight that we are a true silver primary play here. And there's very, very few of them, which I'll allude to on the next slide. There was a couple new additions to this resource, some structures that were not included in the maiden resource, notably Cristiano. It's arguably the highest grade structure, albeit not a terribly large ounce count. It's relatively immature from an exploration perspective, but look for us to put some expansionary holes in that, particularly here in the first quarter. The last thing to really highlight on this slide, other than the cutoff sensitivity, which I won't bore you with right now, is the all-in exploration costs. So at the time of this resource, we had spent right around 42 million US in exploration. Based on this resource, that would yield us a 19-cent per ounce discovery cost. In fact, if you were to consider every ounce added since that March 2022 resource, it only cost us 15 cents per ounce to add another ounce. So it's pretty remarkable. These are industry-leading numbers here on the capital efficiency of our drilling. And the reason why we're getting such great exploration, all-in exploration costs here, is because everything's open laterally right at surface. Every single one of these structures that made it into the resource is open in every direction except for up, because it's at surface. So we're in a very good way with our capital spend, particularly as we continue to expand this resource base ahead of an update here in the second half of this year. So what really sets us apart, what makes us a true standout here in the silver explorer developer space, is these three things: size, grade, and scale. Well, I hope you're getting that sense of scale from some of those previous slides. You know, this resource sits on 10% of the known vein strike. I mean, this is really the size of the island of Manhattan that's just never had any true systematic exploration. The size, well, you can see our resource size here. This is a cross section, at least in the explorer developer space. This is a cross section of Latin American based silver primary underground, and that's a key focus too, underground silver primary developers. You can see where we sit here on terms of our size. Well, we're very far to the left side of this chart. Some of these have been absolutely not in play for a long time and have market caps that are, you know, sub 50 million. They're pretty sleepy stories, whereas we are a very topical story that's got momentum. Drilling the amount we are, you can expect news release every 2 weeks coming from us. But you can see here in terms of grade, this dashed line represents the average grade of these development silver primary stories. So it's sitting under 200 grams per ton, which is where our grades, you know, almost 500 grams per ton at that 150 gram per ton cutoff. And as you raise our cutoff grade, which you'll have to do as you go into a mining scenario, because you need to, when you put economics out, you need to factor in your mining method and the dilution associated to that mining method. And so you're going to have to likely pay for that through cutoff grade. And so increasing the cutoff grade to 250 grams per ton, you can see we have very limited metal loss. You know, we go from 219 down to just under 200 million ounces, but we have a nice pop in our grade. So now we're up to almost 600 grams per ton combined. That does wonders for your economics in the early years of the mine life. And you can see now, when we look at the producers, Aya, Silvercrest, Mag Silver, these typically trade on average over $1 billion valuations, US. Well, we're in a very good way to compare to all three of these off of just a second resource update. So we have not done any reserves. We've not done multiple rounds of that boring infill drilling, which all of these three groups have. So we have to de-risk. We've got a lot left to do on this project, but you can see early days that we're trending and comparing quite well to what they have over there at Juanicipio. So we're very excited. In fact, you can see what Copala looks like. You can basically fit an Aya into just our Copala structure. And that is where the bulk of this year's exploration, as well as last year's efforts, really were focused on. So Copala, again, it's in that southwestern corner of our district. It hosts half, it says indicated here, but it hosts half of our global resource. If you think the maiden resource came out in March 2022, 8 holes were poked into Copala, and it contributed to almost a quarter of that maiden resource. So the reason why we're getting such high ounce count and high grades, well, it's high ounce count from this Copala structure, is these extremely high grades, but also these very, very broad widths. So you got to think this structure is about 33 feet wide. Most of the rooms that we're all sitting in aren't that wide. And the average subvertical vein or epithermal vein in Mexico is around 2.5 meters wide, you know? So when you're comparing 10 meters to 2.5, this is multiples thicker than your other subvertical veins located in Mexico. And so this is why we're so eager to continue expanding this. It's open in every direction. And we've got excellent complements when we talk about Cristiano. So Cristiano runs on the immediate adjacent western edge of Copala. Now, Cristiano, I mentioned, this is the highest grade structure we have at over 600 grams in the indicated and over 900 grams in the inferred. It's right at surface. It's about 2 meter wide structure, so you know, closer to that average structural thickness in Mexico. But because it's so high grade, you're going to grab this. It's not going to be a high development cost to get over to mine this early. You're going to be there mining for Copala. So this is an excellent high grade feed source that we're looking at putting right into the mill first, because again, that does wonders for your economics when you can put very high grade mineralization that's right at surface.
And
So we're very
I'm sorry, Mike,
sorry.
I was just going to ask you of the 90 million of the current drill program, is it going to be concentrated in Cristiano and Copala? Is that the plan?
Yes, absolutely. So four of the 7 drill rigs are currently positioned on these structures, Copala, Cristiano, and there's 2 primary targets, and we're going to come out with a nice 2023 outlook piece here. It should come out next week. That's going to go into a little bit more detail on these targets. But certainly, if you actually were to consider, and we actually press released this yesterday. If you focus on this is dipping to the east, so towards us, right, coming out of your computer screen towards you, it's dipping, and about 500 meters from where the top of this is towards us, right, that's where this target exists of this uplifted block. And this is proposed by our VPX Jesus, is that we've been drilling and identifying, as we go to the east, we've been identifying these very deep basement rocks in this part. And so as we go up, we're finding that there's mineralization that's reminiscent of Copala. So we have some more drilling to do to test these targets, but it's appearing that there's about 300 to 350 meters of vertical displacement. If this theory holds true, there's the chance that there's a whole sequence of Copala style mineralization, which is 10 meters thick, grading half a kilo of mineralization, that it could have brought all of this Copala mineralization right at surface. And so that's a major target for us. And again, we press released that yesterday. We're very, very eager to test this target. I've got another slide that's a plan map that I'll do a little bit better explaining that target to you. But that is our primary target for this year. Of that 90,000 meters, you can kind of think about it, 85% is going to be focused on resource expansion. So right around that resource boundary, we're expanding it incrementally, as well as doing a little bit of conversion, but it's really expansionary. Whereas 15% is going to be focused on that infill. So 85% is expansionary and explorationary, while 15% is doing that targeted infill.
And you mentioned the 90, just a quick question before you move on. So, and this might be putting you on the spot, but of the 90 million, the 90,000 meters you'll be drilling this year, that will be included in the resource update later on this year, correct? And if that's the case, I mean, am I putting you on the spot to ask you what you're thinking that could grow the resource estimate, compared to where it is now?
Yeah. Look, that's a great question. We haven't put it out publicly what that threshold is, but we do have a target of being, at least a base target of being, a 12 million ounce per annum producer. That is what San Dimas is producing. What we see now, it's looking like we're closer to 15 million ounces per annum. And so going beyond that, up to 20 million ounces per annum is the stretch goal. Now that's going to set you in a class of your complete self. There's no other, you're really talking tier 1. This is what the likes of an Agnico would want to see. So where we sit now with 220 million ounces, we suspect that we're going to need closer to 275 to 300 million ounces to put into a mine plan that you'll then have some sort of conversion loss. So going again from resource to actual mine plan, you're going to lose some metal because you have to get that mining method and the dilution and the development costs and all of that once you wrap economics. So that's where we're targeting. I know I'm not answering your question specifically, but you've got to kind of read between the lines.
Yep.
If we've got 220 million ounces now, what we think we'll need to get into that mine plan to produce that production profile we're looking for is about 275 million ounces.
And you'll still have a lot of land left to keep expanding that.
Oh yeah.
Yeah. So
absolutely. And so that's what I'll get into now, right? So I've told you that one near-term target at Copala. And again, Copala is real. It's It's the bulk of our project. You know, it hosts half of our mineralization. These types of structures just they don't exist, right? It's typically subvertical. Now we do know that there's others on our district. In fact, there's one that's about a kilometer to the north of Copala that was previously mined out. Just they mined it as an open pit and they didn't capture the full potential of it. There's a lot of historic workings in our district, but Copala, it never had a drill hole into it. It was never found by the old timers. Otherwise, we suspect it would have been exploited. So Cristiano, where we're going to expand this structure, is actually to the north. There's an extension that goes across another one of our structures that we've never drill tested. And I'll point to this on a plan map because, again, that provides some more context. So Cristiano and Copala, absolutely a major focus for us this year, particularly in this first quarter, as we look to get our foothold on the expansion potential. Napoleon, 500 meters to the west of Cristiano and Copala. This was the bulk of our maiden resource, and this is where our initial discovery was made, right here with these dark purples. So Napoleon's about, you know, just under 3 kilometers long. It is a curtain of mineralization. We've been focused on down along strike to the south and down plunge. We notice that there's this gentle plunge to this structure, but what makes Napoleon interesting is it carries a base metal component, whereas Copala, Cristiano, and this Tahito structure, which I'm not really getting into a whole lot, that's all precious metal. So that's the gold and the silver, whereas Napoleon, it does host a slight amount of lead and zinc. So what we've identified, though, is there's zonation. Basically, where you see these open arrows, that's where the profile turns into more base metal rich. And this is typical of these types of systems. So where we've been focused is down here, where we've had increased grades and increased widths. And this year, where the focus is going to be is into these splay structures. And so now that I'm in this plan map, you can see these kind of splay structures off Napoleon into the footwall and the hanging wall. And that's where we're going to incrementally expand Napoleon, as well as testing some of these other, call it near mine targets. And I know we don't have a mine yet, but that's kind of how we're referring to them. Cuatro de Mayo up here, La Luisa over here. These structures and the mineralization that we're seeing, they're more reminiscent of what we're seeing at Napoleon. So having that kind of metal zonation where you do have an uptick in base metals as you get deeper. Whereas, you know, this Tajitos, Copala, Cristiano plug, you can see it's got a bit of an orientation that runs northeast, southwest versus kind of call it the northwest, southeast orientation of Napoleon here. But we're targeting La Luisa, Cuatro de Mayo as targets to potentially wrap resources around to hit that threshold goal that I just mentioned ahead of this resource update in the second half of the year. So that's Napoleon. If we go back to Cristiano, that offset I mentioned is right up here. So you're offsetting Tajitos. Cristiano comes and it actually offsets Tajitos, but we've never targeted that northern extension up into this area here on Cristiano. So that's a major focus. And that uplifted block that we press released yesterday that I've been discussing at Copala, if we step over here, 500 meters, this is where we're looking to hunt for another end of Copala. But again, Copala is open to the north, it's open to the south. We put some expansionary results out yesterday that continue to support not only that runway to continue expanding Copala, but also we put out infill results to support or demonstrate that mineral continuity, that high-grade mineral continuity. So again, you can see here that we've got a lot of resource base. In fact, if you dropped a pin right in between Napoleon and Copala, drew a 3-kilometer radius, that's capturing about 98% of our resources. We do have this small satellite zone here at San Antonio. In fact, we have a drill rig here expanding San Antonio to the west. And we've also got a small resource component up here at Animas. So of the 7 drill rigs, 6 are focused in the west, 1's in the central portion here. But you can see all of these high-grade samples that we've taken. And there's all these bolded labels. In fact, all of these bolded labels represent newly identified targets. So this is all from our mapping efforts this past year. We have not put any drill holes into this eastern area. In fact, where we suspect this district is going, because we're finding more targets than we're able to drill. So we've only drill tested 30%, but that number is actually shrinking as we continue to find more. But we suspect that if we draw this 3-kilometer radius, well, there could be another 3-kilometer radius here, as well as down here, and certainly over here. That's the ultimate longer term evolution of this district. But right now, you're looking at the first 10 to 15, maybe even the first 15 to 20 years of mine life coming from right here.
Yeah.
And so that's our main focus in the near term. And here's a cross section of that kilometer, or that it says 2 here, it should be 3-kilometer radius. And you can see, again, the orientations of the structures and this large untested swath right here. In fact, we've started drilling in this area. And again, that represents just right here in between. We've started doing a little drill testing in that area, particularly for condemnation drilling for our mill. So before you put a mill in, you'll have to sterilize that ground to make sure that there's not a vein underneath it, because it would be the worst thing to build your multi-million-dollar facility and then discover there's a high-grade structure running right underneath it. So you have to do this sterilization drilling. Well, we've got 3 locations. We've already hit mineralization in one of those locations. I've said from day one, we're probably going to hit mineralization in 2 of our 3 locations. So this is a great problem to have. But it just is another testament to how well the mineral endowment is in this part of the world. I've gone over this map. So to kind of bring things home, what we've achieved, we've outlined a very large high-grade resource, particularly in that western area of the district. But again, that's just a product of where we've focused our drill rigs. That's it. We've now completed initial metallurgical testing at both Napoleon and Tajitos. Again, 2 different slight orientations and 2 slight different chemistries. Tajitos and Copala Cristiano, that part of the district, it's only precious metals, whereas Napoleon does have that base metal component. In both instances, we did preliminary work. Again, it's basic flotation. There's no surprises that came up from the metallurgy. We got recoveries in the low 90s, high 80s for all metals contained at both Napoleon and Tajitos. We do have 100% ownership of this district. That does come with this existing operating infrastructure, but also most notably the network of roads, the access to power. There's deep sea ports in Mazatlan, just an hour drive away. So fantastic access. We've completed only 250,000 meters of drilling to get to this resource of 219 million ounces combined. Again, that's an incredible achievement at a very, very low cost all-in exploration at 19 cents per ounce. And so in progress, this 90,000 meter program to yet again expand and convert the resource base, particularly at Copala, Cristiano, and Napoleon. I don't think we're going to be doing a terrible amount of drilling at Tajitos. And again, that's just because of the success we've been having at our other targets, namely Copala. Copala has just changed the scope of our project because of those high tonnages that you can have right early in the mine life. That'll in turn requires and necessitates a higher scoped milling facility. So we're looking at right now starting at likely a 2,000 ton per day plant. The ongoing exploration drilling of high priority targets. So that's beyond just this resource expansion conversion. I mentioned La Luisa, I mentioned Cuatro de Mayo, as well as what we're doing over there at San Antonio. There's always that potential for another discovery in this district. And we understand that. So we don't want to just be stagnant with those boring infill drilling that we call them hard yards. We want to run parallel, keeping that exploration potential fresh. And we've got metallurgical testing now at Copala underway to aid in further de-risking this project. We just completed a very tight space drill program, as was alluded in yesterday's press release, that will feed into that representative metallurgical program. That will then feed in it will complement the recovery and the met work that we've done at Napoleon Tajitos to feed into our initial scoping study as well as this initial geotech, hydro, and the year and a half of baseline environmental that we've now completed. That'll all feed into an initial scoping study or preliminary economic assessment that we're hopeful to put out following this resource update in the second part of this year. We're hesitant to put firm guidance, time guidance on this PEA, but you can, the earliest you would see it would be the tail end of this year following this resource update. And the last slide to really touch on here, I know I want to leave some time for some questions, is really the re-rate potential. And so looking here at EV per ounce, all of these companies, again, these are the explorers, developers, our real peer group in the space. You can see there's a dearth of quality in the space. We've tucked in here average grade just to highlight what margin could look like, as we don't have all-in sustaining costs, as we don't have economics, and frankly, quite a few of these groups don't either. But you can see here, we've got high grades, and where we're trading now at an EV per ounce, it's about $1. Where we're seeing our project heading, if we look at those direct comparables of Silvercrest and Mag Silver, and again, these are based on the average grade widths that we're seeing, the district upside potential, the overall geology. These are single asset silver producers in Mexico. They're trading at an average of 531 EV per ounce. Now, again, we do have to put the numbers up on the board and de-risk this project similar to these groups, as these are now producing assets. But if you subscribe to that's where we're heading, well, you can look at those market caps. So, this was as of January 4th, but Mag Silver trading at a $1.65 billion US market cap, Silvercrest just under $1 billion, and then of course Aya just over $750 million. So this is where we see us heading in due course, and with fantastic margin that we're seeing already on our internal scoping studies. We're quite confident that we'll continue to put those numbers and move towards the right side of both of these charts. And so that's really it. Just to wrap things up, you can look at this slide. Yeah. We're in a really good position, guys. Funded for 18 months. This is what an exploration story that's successful looks like. And now we're just moving towards the next phase, which is, that development, production decision. And then you'll get into that real tight infill and move towards production on this Lassonde curve here.
Yeah, and you certainly can't argue with the grade and what you have so far. So I think that decision's going to be easy. It's a great presentation. Michael, you covered a lot of ground there, and it's clear that the company's well positioned to become a premier, silver producer. We are going to open the floor to questions. We do have some that have come in already. Just type it into the Q&A or chat box, and we'll make sure it gets answered. Discuss the safety issues and political developments in Mexico between the government and cartels. Do you see any risk to your asset from this perspective? I mean, you did touch on that a little bit, but any additional you could add would be great.
Yeah. There's always, look, in Mexico, especially in Sinaloa, where we are, there's a real disconnect in the perception and then what's actually occurring on the ground. And I think one thing that's really supported that misperception is Netflix, and every time you turn it on, it's Narcos this or El Chapo that, and it ends up giving it a real bad rap. We bring our families down there. It's an incredibly safe place to be. I mean, Mazatlan's a cruise ship destination, but you're absolutely right in the fact that there's always going to be that security risk in Mexico. And frankly, most jurisdictions have some sort of either jurisdictional risk from First Nations or the locals, or that the security risk. And so we're not agnostic to that, but at the same time, we think that Sinaloa is actually in a much better way than many of the other states in Mexico. If you actually look, there's only one group that's really running the cartel, or one cartel or gang, if you want to call it that, in Sinaloa, and it's a very well established group, and they're focused on their business, which frankly is drug production, and it's a big business. It does a lot more what we do at our non-revenue generating silver asset. So we have not communications with these guys, but we have our country managers and our guys on the ground are very well attuned to what's happening with them. And there's never been any dust ups. And we're just be transparent, right?
Yeah.
We just did have that dust up in Sinaloa following in the beginning of the new year. Our project was not disrupted in any way. In fact, we were on holiday break. The drill rigs hadn't even started up yet. So it was basically a non-event for us.
Yeah, that's great. Thank you for that. Given the potential huge deposit, can you give a timeline and capital expenditure estimate for de-risking the project to a point a major mining company might be interested in buying or acquiring the company?
Yeah, that's a good question. That's a question that I would love the answer to as well. Look, it's something we do get asked a lot. What do you guys? And I know this isn't exactly what you asked, but what's the plan? Are you guys planning to develop this thing, build it, or do you want to sell it? Well, my answer is always we're focused on what we can control, and we cannot control what a major does or a potential acquirer. But what we can control is pushing this project forward in the best possible way that is right-sized for any group, really. Not just right-sized for a small junior or a huge swathy project that's only a major can afford or run with. We're doing what's right for the project itself. Luckily for us, the CapEx required to develop a project like this is relatively small compared to other major mining projects, especially those that I mentioned early in the presentation where the bulk of silver production comes from. Silvercrest was just completed on a fixed cost basis for just under $140 million US. That was their total CapEx build. Right now, and again, we don't want to get too far over our ski tips here because we do not have published economics. That's the next step where we can really see all of that. But right now, what we're modeling is somewhere in between 150 and 200 million US as a total CapEx spend.
Wow.
And as far as a timeline, which is a very tolerable number, right?
Absolutely,
Even if you think on the high end of 200 million. And a timeline to get to call it initial production. And again, we don't want to get too far over our ski tips, so you have to take this as a forward-looking statement. Ideally, we could get into initial production by late 2026.
Yeah, that's great. So obviously you get plenty of money in the bank. Just did the large raise. What anticipated milestones do you have earmarked to reach with those funds? I mean, it'll get you through at least the PEA at a minimum, correct?
Yeah, no, that's right. And so I think it's right here. The only one that's not on right here is that PEA. So I personally think that resources, PEAs, you don't usually get a re-rate on the back of those articles of news. They're, in my opinion, they're more milestones than they are catalysts. The catalyst that we see is certainly that ongoing discovery potential, because you never know when the drill bit could uncover another Copala. And frankly, that's the mandate of Jesus Velador, our VPX, is to find more Copalas. And so we've got dedicated drill rigs just to do that alone. So there's always that catalyst that could come up. But to answer your question, funded for 18 months, all of the operational objectives we have of the 90,000 meters, the delivery of an updated resource, and the delivery of an initial scoping study in the form of a PEA, the 62 million we have right now will satisfy all of that.
Great. And there's one more question here. Given the current economic environment, do you view acquisition opportunities to be part of your future growth strategy, or do you pretty much have your hands full with what you have going on right now?
No, it's a great question, and we're back and forth internally on that all the time. And the answer is this project is so big and so vastly underexplored. I mean, we could parcel this project off and have three companies running. So right now the focus is solely on Panuco. However, the moment that you see economics start to come out and the board makes the production decision, we're targeting 2024 for the board to make a production decision here. That's exactly when you'll see the corporate development wheels start to turn, because you will need to backfill. The appropriate timeline from making a production decision to when you're actually generating revenue, call it, and we've already said 2024, make a decision. If you're in initial production in 2026, well, you're generating revenue in 2027. Well, you got to be up the curve before that happens, right? So you're not caught flat-footed. So just thinking about in those timelines, I think is appropriate.
Yeah, and I mean, that's a very reasonable capex that you mentioned, and I know that things change. Will change in the next year or so. It could be more, but do you think overall, in terms of pulling the silver out of the ground, that your all-in sustaining costs are going to be pretty low? When you look at silver, I mean, look, I've seen silver forecast as high as $50, and I've seen it as low as 20 to 25. I think we're going to probably settle into that 25, 30 range here in the short term, and it'll probably go higher. But what are your thoughts on that?
Yeah, look, I'm in agreement with you, and in fact, I'm lucky. I get the banks sending me all of the commodity consensus prices, and they pool it from a source of 30 different groups. And right now, the updated silver consensus commodity price from all the different banks and analyst communities is right around that $24, $25 range that you're mentioning. I don't suspect we're hitting that 50 mark tomorrow. It would be great, but keeping in line with that call it $24 per ounce long-term silver price. What we're seeing our analysts, and that's all I can really give you today. I mean, sure, we run internal models of what the all-in sustaining cost could look like, but we've had two analyst reports from PI and from Stifel came out yesterday. Where they've now plugged in the new resource numbers and fine-tuned their valuations, and in both cases they're estimating all-in sustaining costs that are below $10. In fact, they're closer to $9 US all-in sustaining. Wow. And that's where you want to be. There's a rule out there called Archie's rule, and it's a way to value a property where you look at the all-in sustaining cost, and if it's half of the commodity, so you need the commodity itself to be trading at double what your all-in sustaining costs are. That allows you to have comfort that you can weather the storm in any commodity price environment. And it's a green light to say, okay, well, this project will work if gold drops to $1,000 an ounce again. Yeah. And so honestly, when I was an analyst for years at Canaccord, that was always something I looked at too. Can this project stand any commodity price environment? And I'm confident that Panuco can withstand, $14 silver, probably all the way down to $11 silver. Yeah. Right. And so that, again, those numbers, those are analyst estimates, but those are two fresh analyst estimates that are hovering around $9 US all-in sustaining. Yeah, and very good margins. Yeah, absolutely. And I think with the electrification of our of the economy and moving more toward a green economy, the demand is going to continue to outstrip supply. And so I do think we're setting up for long-term higher prices, which will probably coincide nicely for when you go into production. So yeah, timing. They say it. Timing is everything, right? Timing is everything. Well, I think we're going to leave it there for today. Michael, I want to thank you for bringing our viewers up to speed on Vizsla. We covered a lot of ground today, and it was certainly a very thorough presentation. Obviously, a very exciting time for the company, especially with all the recent and anticipated milestone announcements. And we look forward to having you on again in the future. Before we wrap it up, any parting words for our guests, Michael? No, look, I'll just reiterate again, this is what an exploration project that is successful looks like. And, you can go back and look at the track record of some of these names that I've highlighted today, if you're not terribly familiar, and see how their company has re-rated along the way since then. You see an influx of new investors coming as you de-risk. Some of the speculative nature, that speculative money seems to drop out. And we're right at that inflection point now. So I can't imagine a better time to be entering this story where we're growing it. We've put up incredible numbers. We're not slowing down, but it's still cheap. It's still cheap. So I think it's certainly worth your time and effort to do some research on this file.
Yeah, and I think the last raise, the appetite for getting involved in that, I think speaks volume. So it's another feather in your cap. In the meantime, you can get additional information on Vizsla Silver at the company's comprehensive website, vizslasilvercorp.ca, including details on the company's current project, as well as the latest press releases.